What we saw earlier this year was Franco coming in and acquiring a 7.5% gross margin royalty over Cote, and they paid $1.05 billion for that royalty. Now our royalty is slightly different. We have a 0.75% top line royalty on different coverage, but regardless, it's a great endorsement of the value there at Cote and a great see-through value for our interest.
Yeah. Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here at the 2025 Rural Symposium in Boca Raton, and we are back with Peter Behncke of Gold Royalty Corporation. Peter, thank you for coming back on the show.
Steve, thanks for having me.
Yes, and thank you, too, for your efforts on behalf of shareholders such as myself and the viewers of this channel. Real quick, market cap, cash, and debt of Gold Royalty Corporation.
As we said today, the market cap's currently around $400 million US. We're solely listed on the NYSE American. Looking at the balance sheet, we have just north of $3 million in cash, $27 million drawn against our revolving credit facility, and $40 million in convertible debentures outstanding. I would note that 2025 is going to be our first year of free cash flow at Gold Royalty Corp. We're going to be looking to allocate some of that towards our debt repayments.
Okay, all right. So 40 million market cap, 3 million cash with 27 on a revolving that you can draw from,
Yep.
And then 40 million debt.
Yeah, and that's a total $75 million facility with 27 drawn and 400 million market cap.
Okay, all right. Oh, did I say 40? Oh, all right. Yeah, slipped a zero there. Yeah, just a minor little detail there. Okay. What is what's your guys' insider ownership right now?
Right now, the shareholder register, we've got about 7% insider ownership. Another 12% on top of that is controlled by Gold Mining Inc., our former parent company. So insiders effectively control close to 20%. Beyond that, our largest shareholders include Barrick at 6%, who we previously acquired a royalty package from. And then over the last 12 months, we've seen the institutional side of our register increase as our free cash flow has improved, and that's up to around 16% institutional ownership. The remaining 60% is free float.
Okay, so 60% are available to retail. Okay, all right, and let's just kind of run through. We'll call them the Mag 5 here. We got Canadian Malartic, Côté, Goldstrike, Railroad, and Vares. Let's start with Canadian Malartic. Just any updates? What do you got?
Yeah, so Canadian Malartic, our flagship asset, we have a 3% NSR over the northern portion of the Odyssey underground mine. Really steady on. Agnico has done a great job. They're expecting to fully transition and ramp up the underground production there in 2028. Shaft sinking and ramp development are on track to be complete by mid-2027. And in fact, they've highlighted that the potential for a second shaft to increase annual production is in the works. They're looking to publish an updated study in 2026 that would envision that increased underground mining rate. For us, the near-term production is relatively modest from the open pit, and then it step changes in 2028 when that underground really kicks in.
Okay, all right. And you expect an increase from that or a decrease?
A significant increase. Yeah,
okay.
It'll be a major driver of growth once that underground production kicks in 2028.
Okay. And Côté.
Côté is timely. It's been in the news recently in the royalty and streaming space. IAMGOLD's done a great job ramping up that asset through commercial production, and they're now looking to exit the year at full nameplate capacity. What we saw earlier this year was Franco coming in and acquiring a 7.5% gross margin royalty over Cote, and they paid $1.05 billion for that royalty. Now our royalty is slightly different. We have a 0.75% top line royalty on different coverage, but regardless, it's a great endorsement of the value there at Cote and great see-through value for our interest.
Yeah, yes, it certainly doesn't hurt. Okay, Goldstrike.
Goldstrike, similar to Odyssey with Canadian Malartic, going to be a driver for us in a couple years. Until recently, we had very little disclosure from Barrick, the operator there, on how Ren was going to come into the Carlin Complex mine plan. And just as a reminder, Ren is the northern extension of the Carlin Complex, the largest gold mining complex in the USA. They outlined that they expect Ren to be incorporated into the mine plan in 2027, producing 140,000 ounces a year, which is really just 2 years away.
Yeah.
So going to be a meaningful driver of revenue growth for us in the relatively near term. And we have a 1.5% NSR and a 3.5% profit interest over the entire Ren project.
Okay. And Railroad.
Railroad, happy to hear the operator here, Orla, looking to bring this asset into production at the end of 2027. We have a smaller interest here, a 0.44% royalty over just a checkerboard of the deposit. But with the new administration in the States and this push for faster permitting timeline, this is one of the assets in our portfolio that we see benefiting from that as they move this asset through permitting currently.
Okay, and update on Vares, our copper
Vares.
asset.
Yes, our copper stream, I remember a year ago we had just acquired it, and it's been a very dynamic year since then. Most recently, they achieved commercial production here at the end of Q2, and we've also seen Dundee Precious Metals announce that they have agreed to acquire Adriatic. So the Adriatic team did a great job advancing this asset, but we're quite encouraged to see an experienced and established producer come in that's well capitalized to really unlock the full potential of Vares. It gives us a lot of surety in what this mine will be, and their investment into the asset is a great endorsement as well.
Last time we talked, viewers will probably remember that they had an issue with the where to store the tailings.
Yes.
Give us an update on that.
Yeah, so they outlined an alternative facility to store the tailings that wouldn't impact the near-term production. They are still going through an updated process to get that previous Vares tailings facility in place. Ultimately, production profile is unchanged, and again, this Dundee Precious Metals investment, paying a premium to come in and acquire that asset, is a great validation that the long-term prospects for Vares are very, very constructive.
Okay. And how long do you think the royalty will last on that?
So the 100% copper stream runs in perpetuity on that mine as long as it's producing. The current mine life from their old feasibility study was 18 years, and that only covered a portion of the reserve. So this will be a multi-decade deposit life.
Okay. And so Gold Royalty Corporation is mostly gold. You have Vares for copper. Mm-hmm. About what percentage of revenue streams, income, cash flow come from gold, and about what come from copper?
Yeah, so on a near-term 2025 revenue basis, and these are rough metrics. So that's something we disclose. It's about 3/4 gold, 1/4 copper, with Vares and Cozamin being bigger drivers of our near-term revenue. We see over 90% gold in our portfolio on a NAV and book value basis. But we do see a little bit more weighting in the near term, just with Cozamin and Vares being two of our 7 cash flowing assets currently.
Okay. All right, so it's up as far as copper exposure.
I mean, we're at $5 a pound copper, $3,300 an ounce gold. Both commodities we're quite bullish on, and I think the current macroeconomic backdrop is constructive for both gold and copper.
I just got cell phone reception, saw copper hit a new all-time high today.
Oh, really?
Yeah.
I'm probably late to the party there. And
I was too, apparently. We don't get very good cell phone or Wi-Fi in here.
Well, that's great for copper and great for our copper investments.
It's not bad at all, especially for our copper bet. Okay, what are some catalysts that you see coming up for Gold Royalty Corporation?
I think in the near term, it's Cote and Vares, as I mentioned, ramping up, achieving commercial production this year, and then we'll benefit from a full year of a really full ramp up at those assets through 2026. The third asset we see ramping up is Borborema. They're expected to achieve commercial production in the third quarter of this year, so later this quarter. Their guidance is for just under 40,000 ounces a year of production in 2025, and then upwards of 80,000 ounces in 2026. A full year at nameplate. We have a 2% NSR over that entire asset. Beyond those 3 assets and the immediate catalysts, we have assets like Railroad and Ren coming online in 2027, Canadian Malartic in 2028, and then we're on track to deliver 5-year outlook of upwards of 23,000 GEOs, and the low end of our 5-year guidance, 5-year outlook, I should say. So a lot of encouraging growth across the portfolio that's fully bought and paid for. Over 80% of that growth is on brownfield assets like Canadian Malartic, assets like Ren, that are part of existing complexes. They're already permitted. There's already infrastructure in place, and they have top-tier operators, Agnico, Barrick, driving forward those deposits. So it gives us a lot of confidence that growth is going to be realized over the coming years.
What you mentioned at the beginning, this is your first year of positive cash flow. What go into that? How much are we positive this year? what does the forecast look like for 2026, 2027, and 2028?
Yeah, so while we don't provide detailed free cash flow guidance year over year, so I'll be somewhat generic, but in 2025, we provided guidance of 5,700 to 7,000 gold equivalent ounces of production. 2024 was our first year of operating cash flow. This year, we're looking to cover our interest costs. We have fixed overheads of around $7 to $8 million a year in G&A, and then we had around $5 million in interest costs that we had to clear last year. This year, with where the gold price has been, we're quite bullish that will generate relatively meaningful positive free cash flow and start to put some of that away against our debt. Through 2026, 2027, 2028, I'm hesitant to speak in definitive free cash flow terms, just given volatility in the gold price. Consensus estimates have our gold equivalent ounce, that volume production profile, getting close to 25,000 GEOs by 2029.
25,000 by 2029?
Yes.
Okay, 25,000. And right now we're at, you said
5,700 to 7,000.
5,700 to 7,000 gold equivalent ounces, so they
Yes.
can do the math.
Yeah.
Okay.
Yeah, pick your gold price.
Okay.
And, yeah, exactly.
Okay, and ballpark 2026, how many GEOs?
We haven't provided guidance, but analyst consensus estimates for 2026, I believe, are in the 8,000 to 9,000 range.
Okay.
But that's something we have to look into.
Okay. All right. Okay. Awesome. But somewhere in between 5,700 to 7,000 for this year, up to 25,000 for 29.
Yeah. So from 2024, we had 5,400 GEOs. The midpoint of our 2029 outlook is 25,500. That's 367% production growth.
Yeah.
Over 5 years. So
okay.
That's and again, 80% of that growth is on brownfield assets.
Yeah.
It gives us a lot of conviction in our profile.
This is why I bought the company 2.5 years ago. Was for moments like this. Okay, and what is the biggest unanswered question facing Gold Royalty Corporation today?
I think it's what I mentioned at the outset. It's our first year of positive free cash flow. First time in our 4-year history that we're now starting to stack the balance sheet, see cash hit those bank accounts. So questions, what are we going to do with it?
Yeah.
Where's it going to go? What's our capital allocation strategy? And I think priority number one has always been to pay down some of that debt, decrease our interest costs, improve our financial flexibility. It's an easy automatic rate of return for our shareholders. Beyond that, in the medium term, we will look at some type of capital return to shareholders, whether that be a dividend or if the share price is undervalued, look at buying back stock. It depends where the multiple is at. With that said, we still see scope for growth. We want to build a larger company. We see the correlation of scale and multiple, but we need to do so in a disciplined manner. We will only look to continue to grow the business where we can look to increase per share metrics of the company.
Yeah. Okay. Well, that's a first world problem. We're getting cash. What do we do with it? Okay. So that debt that you're talking about was the $50 million that we bought Vares with. That's down to 40 now.
So we've got 27 drawn on our revolver, and then $40 million of converts that are currently in the money.
Okay.
So those mature in a few years.
Okay. All right. Awesome. Well, Peter, if people want to get a hold of you and follow Gold Royalty Corporation, how can they do so?
Yeah, please reach out. info@goldroyalty.com will come directly to me, and we can always address any questions you may have, and look forward to hearing from shareholders. Thank you again, Steve.
Thank you, Peter. Pleasure to have you again. And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.